The CoinDesk Spotlight is brought to you by Nexo, the place to earn on Bitcoin, Ethereum, and more.
So our next guest predicts there will be more than 10 new blockchain unicorns that will emerge this year as governments move forward with central bank digital currencies. Joining us now is Matthew Merle, managing partner of Fifth Era and of blockchain co-investors of Blockchain Venture Fund of Funds. Welcome to the show, Matthew. So what part of the crypto industry do you see a stampede of unicorns emerging from?
Well, it's great. Thank you very much. It's great to be here, Christine. And so the answer to that is everywhere. We think of this as a technology stack. And down at the foundational layer, we tend to see most of the projects choosing to be crypto projects. And their value capture is in the value of their tokens. At the transactional layer and the application layer of this technology, we tend to see blockchain enterprises getting backed with equity. And we're seeing the rise of a large number of unicorns on the blockchain enterprise side as well. So it's happening on both sides, crypto projects and blockchain unicorns.
So Matthew, to quote a medieval knight, which unicorn should we hunt? I mean, basically, which one do you think will provide the best returns? Where should investors throw their money?
Well, it depends whether you want to be an early stage or a late stage investor. We're primarily early stage investors. We're investors in about 300 blockchain unicorns and projects, so of all sizes, but we invest early. And I should just, for full disclosure, say we're also investors in DCG. So for us, we need to be highly diversified. And in order to be highly diversified in an emerging technology like this, you've really got to cast a broad net. And so we invest on both sides. We look for all of the emerging themes, whether it be DeFi or the rise of digital wallets, digital exchanges, settlement systems, the underlying protocols, the applications, and so on. Any names? Sure. So in the last year, we've seen the rise of a bunch of blockchain enterprise unicorns. The NFT space has given rise to Dapper Labs, Animoca, Forte, all of whom are now rising up in their value chains, driven by great interest globally in digital assets. We continue to see the rise of digital wallets. We saw, obviously, Coinbase go public, but we know that there's going to be room for a lot of wallets and exchanges. We have about 10,000 banks in the world. Most of those banks do not have a digital wallet. All of those banks will need a digital wallet. And so obviously anyone who's building a fully capable wallet today, it can be the Mercados in Latin America, it can be the Bitpandas or the Bitthums in other parts of the world. These digital wallets are raising in value very quickly because you can't have a digital world without digital monies, and digital monies requires digital wallets. And so the people that build digital wallets are going to be in demand, and their infrastructure is going to be used much more in the future. Whereas obviously if you're a traditional bricks and mortar bank, most of your infrastructure is legacy and most of it's going to get stranded. And that huge shift is what we see reflected in the value capture in this space.
So you're clearly bullish on a lot of blockchain projects, but could you just maybe, while we're naming names, are there some investments that investors should stay away from, like blockchain projects that are not going to become unicorns and people should be wary of putting their money into?
It's a great question, and the answer is most of the projects will fail. In early stage technology, that's always true. In the past, I helped run the world's largest angel group. We back 300 or 400 companies every year. That's called Keiretsu Forum. And we learn every day that early stage technology is a risky space to invest, and most of the projects will fail. For the world's largest venture capitalists, about 60 to 70% of their projects will fail. And I see no reason to believe that blockchain and distributed ledger technology is any different. The failure rate is extremely high. And if you're going to be an investor, you need to be broadly diversified. And that's what we do. We're an investor in 25 blockchain VCs globally, Europe, North America, and Asia. And we make sure we have very broad diversification. I think indexes and ETFs can help, but they're only just arriving on the scene. And I know you have a family of those products under the DCG umbrella, so does Bitwise and others. But diversification is key in marketplaces with high risk and high volatility.